Hi, today we're going to have a look at the 2017 Cert Higher Level Sole Trader Question 1. As with all Question 1s, we are given a trial balance and then we are given some notes where we have to make adjustments to the trial balance. There are 10 notes in this question and that's where we're going to start off with. The first note is in relation to closing stock. It says stock on the 31st of 12, 2016 at cost of 76,500. This figure includes damaged stock which cost 4,500 and now has a net realisable or sales value of 3,000. And again, this is a common first note to get in this question. So to do that, we're going to have to start off with closing stock per note 1, which is 76,500. We're going to take away the cost of the damaged goods, which is 4,500, and we're going to add the net realisable value of 3,000. And that gives us 75,000. Now, as we're going through the question, I'm going to write beside them where these figures go in the accounts, but there's a change to closing stock later on, so I won't write that in yet. Again, note 2 is a common note in these questions. It's where they buy a van and sell a van. Usually, it takes 6 notes to take care of this question. So we'll have a look at note 2 now. The first 2 notes are to do with the depreciation and the profit and loss in the old van. So the first 2 notes are to do with the old van. The first thing we have to do is go back to the question and see how long we had the old van for. Well, we bought it on the 30th of the 9th, 2012, and we sold it on the 31st of the 3rd, 2016. So we had it for all of 2013, 14, and 15. So that was 3 full years. We had it for 3 months in the year we bought it, and we had it for 3 months in the year we sold it. So in total we had it for 3 years and 6 months. Now the cost of the van we're selling is 40,000. So the cost is 40,000. By the rate of depreciation is 15%, which is 6,000. And then that's for 1 year. So for 3 years, I just multiply that by 3, which gives me 18,000. Now, if the depreciation for 1 year is 6,000, if I get my 6,000, divide it by 12 and multiply it by 6, it will give me the depreciation for 6 months of 3,000, leaving me with a total depreciation on the old van of 21,000. Now I can see whether I made a profit or loss on that van, because the cost of the van I sold again was 40,000. The depreciation here, after working out above, was 21,000, which leaves me with a net book value of 19,000 for the van that we sold. If we go back to the question, it tells us that we got an allowance of 18,000 off the new van. So if it was worth 19,000 and they gave us 18,000 off the new van, we're down 1,000 euro. So we made a loss on the sale of van of 1,000 euro, and that's a selling and distribution expense in the P&L. The third note for note 2 is always the cost of vans. So again, we're going to start off with what the cost is in the trial balance. In the trial balance, the cost of vans is 150,000. We're going to take away the cost of the van we sold, which is 40,000, and we're going to add the cost of the van that we bought, which is 48,000. And that leaves me with a total cost of vans of 158,000. And that 158,000 goes in the fixed asset note in the balance sheet. The fourth and fifth notes for note 2 are to do with depreciation. So we have to work out the depreciation for the year, and then we'll always have to work out the accumulated depreciation. Now we need to do them in this order because we need the depreciation for the year to work out the accumulated depreciation. So to work out the depreciation for the year, for the first 3 months the cost was 150,000, the same as it was in the trial balance. Then we sold a van and we bought a van, and for the next 9 months the cost was 158,000. So to work it out, for the first 3 months it was 150,000. The rate of depreciation was 15%, and for 3 months I multiply that by 3 over 12. And then for the next 9 months the cost was 158,000. Again, it's by 15% and by 9 over 12 for 9 months. So in total that gives us depreciation of delivery vans for the year of 23,400. And that will be a selling and distribution expense in the P&L. We can now work out accumulate the depreciation of delivery vans for the year. So if we go back to the trial balance, we can see that the vans originally cost 150 and at the start of the year they were worth 85. So the depreciation must have been the difference between 150,000 and 85,000, which is 65,000. Then I'm going to add my depreciation for the year, which I got above of 23,400. But I need to take away the depreciation of the old van, the one that we sold, because we don't have that van anymore. So we need to take away the depreciation, and we've worked that out up above, which is 21,000. So in total, the accumulated depreciation of delivery vans is 67,400, and that will go in the fixed asset note in the balance sheet. And the last thing, the sixth note we need to do for note 2 is, at the end it says that the check for the net amount of this transaction was entered in the bank account but was incorrectly treated as a purchase of trading stock. The purchase wasn't in the normal course of business, so it shouldn't have gone into purchases, so we need to take that out. So per the trial balance, purchases were 536,500. And I need to take away the net amount. Well, if the new van cost 48 and we got an allowance of 18, what we would have actually paid was 30. And that's the amount that was incorrectly included in purchases. So we need to take that out, which leaves me with purchases of 506,500. And again, there's another adjustment to purchases later on. Note 3 is the suspense note. Usually with the suspense note, there's two things going on separated by the and. The first thing here is to do with mortgage interest. The mortgage interest figure is wrong. And the second thing is a VAT refund, and it was entered only correct in one account. So we'll have a look at them separately. The first thing is the suspense for the mortgage interest. It says the suspense figure arises as a result of the incorrect figure for mortgage interest, although the correct figure has been entered in the bank. So if we go to our trial balance, and we go down and look for mortgage interest for the first 3 months, it's telling us that figure is incorrect. That 2,400 is incorrect. So we need to work out the correct figure for the first 3 months. While we're doing that, we may as well work out the mortgage interest for the year, as we're going to need the mortgage interest due for the balance sheet, and we're going to need the total mortgage interest for the P&L. So to work out the mortgage interest, I can see from the trial balance that the mortgage interest, it's a 6% mortgage and it's 180,000. And 3 months of that were incorrect. So I need to split it up into, I need to work out the 3 months that were incorrect, and then I'll work out the 9 months that were due and the total for the year. So I'm going to split it up into 3 months and 9 months. So for the first 3 months, it was 180,000 by 6% by 3 over 12. And then for the next 9 months, it's 180,000 by 6% by 9 over 12, which leaves me with total mortgage interest for the year of 10,800. Now, the easiest way to see whether you're adding or taking away the stuff from suspense is to do little T accounts. So I'm going to open up a T account for mortgage interest for the first 3 months, and when I'm doing these T accounts, I'll always start off with the figure from the trial balance. So from the trial balance, it tells us that mortgage interest for the first 3 months was €2,400. Now, we're after working out that should be €2,700. So to change this, and sorry, before I do that, I'll also put in the trial balance figure from suspense. So if we go back and have a look at suspense, which is included in insurance, it's 17,700. So I'll put those trial balance figures in first. Now, we're after working out that this 2,400 should in fact be 2,700. So to get 2,400 up to 2,700, I'm going to put €300 on the same side, and then I'll just put it in the opposite side of suspense. If that should have been, let's say, 2,000, I would have put 400 here to bring it down to 2,000, and then 400 on the opposite side of suspense. And we can see here, just to show that working, the mortgage interest should, from above, be 2,700. In the trial balance, it's 2,400. So the difference that I need to put into the account was €300. The error was €300. Now, to have a look at the second part of the suspense. The second part of the suspense says there was a VAT refund of 200 entered only in the bank account. So the two accounts here that should be affected are VAT and bank. So again, I'm going to use T accounts to show what's going on here. So with the VAT and the bank, it was a VAT refund. So if it's a VAT refund, it should be money coming into the bank. So we should debit bank, you always debit bank, and credit VAT. because in this question, I think VAT is an asset. So if we got a refund, it would bring down that asset. So in the grey is what should have happened. Now, if we go back to the question, it says that the VAT refund of 2,000 was entered only in the bank account. So it was entered correctly here, so I don't need to do anything with that. It wasn't entered in the VAT account, so I need to put in the 2,000 into the VAT account, and then I just put it into the opposite side of suspense always. And that is the second part of the question done in the T accounts. Now to do up the notes for these T accounts. The mortgage interest, there's no need to do a note for mortgage interest because we've used the correct figures for mortgage interest in this mortgage interest note, so that's fine. Insurance including suspense, I do need to do a note for. Okay, so the insurance including suspense per the trial balance is 17,700. I'm going to add the VAT error because it's a debit balance, it's the same side as the 17,700. So I'm going to add that 2,000 and the 300 for mortgage interest I'm going to take away because it was a credit balance, so I'll bring down the 17,700. So in total, insurance including suspense comes to 13,400, and sorry, that should be 17,700. So in total it comes to 19,400, which is an admin expense in the P&L. I'm going to need to do a note for VAT because I'm after crediting VAT with 2,000. Now in this question, and it's unusual enough, the VAT is actually an asset. I can see it's an asset, a debit balance of 6,400. So if the debit balance is 6,400, so if I'm crediting with 2,000, I'm going to reduce that debit balance. So now I'm going to have a debit balance of 4,400 euro. And because it's an asset, it's going to go into current assets in the balance sheet. Note 4 is to do, again, this is a common note that comes up a lot. Patents, which includes 4 months and incorporates 4 months investment income, is to be written off over a 5-year period commencing in 2016. So the 4 months investment income were incorrectly put into patents and we need to take it out. But to understand this, patents are an intangible asset which have a debit balance. Investment income is income which has a credit balance. So if I take out the credit investment income, my patents are actually going to go up. So the first thing I need to do anyway, it's because in the question it says that 4 months investment income are included in patents. So I need to work out those 4 months. But I may as well work out investment income for the year while I'm doing this because I need to have the figures anyway. Now I can see here that my investments were 3% investments, but I only got them on the 1st of the 5th. So I only had them for 8 months. So I'm going to split it into 4 months and 4 months, which will give me the total for the year. So for the first 4 months, their investments were 200,000. They're 3% investments, and to work out 4 months, I'm going to multiply 4 over 12. And for the next 4 months, again, I'm just going to do the same thing, 200,000 by 3% by 4 over 12, which gives me investments for the year of 4,000. Now, this 2,000 was incorrectly included in patents, so I'm going to have to take that out of patents. By taking it out, I'm actually going to add it on. This 2,000 here is investment income due, which is a current asset in the balance sheet, and the total 4,000 investment income will be added on down at the bottom of the P&L in operating income. So patents, per the trial balance, I can see that patents were 68,000 of a debit balance because they're an asset. That includes a credit of 2,000, which shouldn't be there. So if I take out that credit of 2,000, it's actually going to bring my patents up to 70,000. Now those patents have been written off over 5 years. So if the patents are 70,000 and I'm writing them off over 5 years, if I divide by 5, I'm going to be writing off 14,000 a year. And that patent written off is an admin expense in the P&L. Now the patents, the intangible asset in the balance sheet, I have to work out. My patents, my correct patents figure after the adjustment was 70,000. But I'm writing off 14,000 of it to the P&L. So in my balance sheet, my total payments or patents are going to be 56,000. And that 56,000 is an intangible asset in the balance sheet. If we go back to note 5, it says provision to be made for investment income due and mortgage interest due. Well, the good news is we have these done already, because the mortgage interest due I worked out when I was doing note 3. The investment income due I worked out when I was doing note 4, so there's nothing to do here for note 5. Note 6 says a creditor was owed 7,600, accepted office equipment with a book value of 6,500 in full settlement. So we owed somebody 7,600 and they accepted office equipment of 6,500 to cover the full debt. The equipment had originally cost 11,000. No entry was made in the books in respect of this transaction, and then we were asked to provide for depreciation of office equipment held at the end of the year at a rate of 20%. So note 5 there's nothing to do. Note 6 then, creditors. So per the trial balance, we can see that creditors were 78,000. We owed them 7,600, but we gave them the equipment, so we don't owe them that 7,600 anymore. So creditors are going to go down by 7,600. So creditors are now 70,400. And there's another change to creditors, so I won't write in where that goes yet. The cost of equipment. Per the trial balance, the cost of equipment is 25,000. We got rid of equipment which had a cost of 11,000. So equipment is going to go down by 11,000. And equipment is now 14,000. We received a discount because we owed 7,600 and we gave equipment which is only worth 6,500, so effectively we received a discount of 1,100. Now, we have to have a look at the discount here in the trial balance because it's a discount net. Sometimes it can be an asset, sometimes it can be a liability, depending whether we gave or received more discounts throughout the year. So in this question, the discount is 3,200. Sorry, it could be income or expenditure. In this question, it's a credit balance of 3,200, which is income. So it's 3,200 of income. We received another 1,100, so that's going to bring up our income to 4,300 euro. And that discount received is going to go in operating income in the P&L. The next thing we had to do was to work out the depreciation of equipment for the year. Well, the cost of equipment at the end of the year was, I can see from up here, 14,000. The depreciation rate on equipment, if we go back to the question, we can see that the rate of depreciation on equipment is 20%. So the depreciation for the year on equipment should be 14,000. Sorry, it should be 14,000 by 20%, which is 2,800 euro. And then I have to work out the accumulated depreciation of equipment. But from the trial balance, we can see that the cost is 25 and it's now worth 15. So the depreciation at the start of the year must have been 10,000. I'm going to add the depreciation for the year, which I'm after working out to be 2,800. And I'm going to take away the depreciation of the old equipment. Now, the old equipment, if you go back to the question, we can see that the equipment cost 11,000. It was worth 6,500. So the depreciation must have been the difference between the two of those. The depreciation would be equal to 11,000 minus 6,500. So the 4,500, we need to take that out because we don't have that equipment anymore. So accumulated depreciation of equipment is 8,300, and that will go in a fixed asset note in the balance sheet. The next note we have to do is note 7, which says provide for depreciation of buildings at a rate of 2% of cost per annum. It was then decided to revalue land and buildings at 800,000. So the first thing we need to do is get the depreciation for the year, and then we need to do the revaluation. Well, the cost of buildings in the trial balance is 680,000. If we go back to the trial balance and have a look at our buildings, 680,000. So the cost is 680,000. The rate of depreciation on buildings is 2%. So to work out the depreciation for the year, it's going to be 680,000 multiplied by 2%, which is 13,600. And that's going to be an admin expense in the P&L. Then after that, they decided to revalue the land and buildings. So we need to set up a revaluation reserve. The first thing we do here is get the old cost minus the new cost. Well, if we're revaluing them to 800,000 and they were 680,000, they have gone up by 120,000. Then I have to add back the depreciation of the buildings for the year of 13,600. I have to add back the accumulated depreciation. Again, I can see from the trial balance that the cost originally were 680,000, and at the start of the year they were worth 595,000. So they must have been depreciated by the difference of the two of those, which was 85,000. So if I add all of these, it'll give me my revaluation reserve of 218,600. And that revaluation reserve goes in the finance by part in the bottom of the balance sheet. The next note I have to do is note 8. So this will be note 8. And note 8 says that a cheque for 700 had been received at the end of the year in respect of a debt of 1,200 previously written off. So we had this person previously written off as a bad debt, and now they're going to pay the €700. And it says they wish to trade with us again and have undertaken to pay the remainder in a month. So they're going to pay us the other €500 in a month. No entry is made in the books in respect of this transaction. So just quickly to see what's going on here in this note, we received €700. The total debt was €1,200, so the difference that we're still owed must be €500. So the €700 will affect, the €700 we received will affect the bank. Now, if we look at our trial balance, we should be able to see the bank here, even though it doesn't say it, it's an overdraft because it's a liability, it's a credit balance. So that's a bank overdraft of 70,300. So if I receive €700, that's going to reduce my overdraft. So my overdraft is now down to 69,600. And that goes in liabilities less than 1 year in the balance sheet because it's an overdraft. Debtors from the trial balance are 70,500. Now I'm still owed €500. So that's going to increase my debtors up to 71,000. And then the €1,200 is to be included in operating income in the P&L. It's called bad debt recovered because we got 700, he's giving us the other 500, so in total we're going to recover €1,200, which is goes as operating income in the P&L. Note 9. No record has been made in the books of goods in transit at the end of the year. The invoice for these goods had been received showing the recommended retail selling price of 16,000, which is cost plus 25%. So the goods in transit are something we purchased before the year end, but we haven't put them into our accounts. And because they're purchases, they will be valued at the cost price. So the 16,000 is the selling price. We need to work out the cost price. So the 16,000 is the selling price, which is cost plus 25%. So to get the cost price, I need to get the 16,000 divided by 125 and multiply it by 100. The cost price of the goods were 12,800. Now they need to be added to closing stock because we bought them before the end of the year, so they should be included in stock. Now per note 1, closing stock was 75,000. After we made our adjustments in note 1, closing stock came to 75,000. I now need to add the cost of the goods in transit of 12,800, which leaves me with 87,800 of closing stock, which goes in two places. It goes in cost of sales in the P&L, and it's also a current asset in the balance sheet. Creditors, I owe the money for these goods because I bought them before the end of the year, so these need to be added on to creditors. So from note 6, I can see creditors are 70,400, and I need to add the 12,800 again, the cost of the goods, which is 83,200. And again, now that's our final adjustment to creditors, and creditors go in liabilities less than 1 year in the balance sheet. Purchases, per note 2, purchases are 506,500. Again, I purchased these before the end of the year, so they needed to be added on to purchases, which gives me a total amount for purchases of 519,300. Now I've only one note left. I'm not going to write in where purchases go here because it's affected again in the last note. But I have a look at note 10. It says goods taken by Mullen for own use during the year were not recorded. So these are drawings of goods. These goods had a retail value of 4,800, which is cost plus 20%. Again, because he took them for his own use, we're going to take them out of purchases and add them to drawings. And because the purchases, they're going to be valued at cost price. This 4,800 euro is the selling price. So again, the 4,800 euro is the selling price, which is cost plus 20% this time. So to work out the cost price, I'm going to get my 4,800, divide by 125, and multiply by 100, which gives me a cost of 4,000 euro. Now, the purchases, the last time I changed purchases were on the note above, note 9, so the most up-to-date purchases figure is 5,19300. And I'm going to have to take out the drawings of the stock of 4,000 euro, which leaves me with purchases of 5,15300, and that goes in the cost of sales in the P&L. And the drawings, I'm going to have to add the 4,000 to drawings because he took them out for his own use, so that will increase drawings. Drawings for the trial balance are 15,600. I'm going to add 4,000, which gives me total drawings of 19,600, and that goes in the finance by in the balance sheet. So that's all the notes done. Now we have to do the accounts. We're going to start off our trading profit and loss. The first thing in trading profit and loss account will always be sales. Now there was no change to sales during the year, so sales are the same as were in the trial balance, 792,000. Our cost of sales. So to work out our cost of sales, we're going to start off with the opening stock, which will be from the trial balance. That should never change. Then we're going to add our purchases. So my purchases, I'm going to get my most up-to-date purchases figures from note 10 of 5,15300. So opening stock plus purchases gives me 5,81300, and then I'm going to take away my closing stock, which again I've changed a couple of times, so I need to go back to the notes and get my most up-to-date figure for closing stock, which is 87,800. And that will leave me, when I take away the closing stock, it will leave me a cost of sales of 4,93500, and then my sales minus my cost of sales leave me with a gross profit of 2,98500. Now I need to add my operating income. So to do that, the first thing I'm going to do is to get my discount received. So my discount received, again, there was a change to discount received. So if I go back to the note, I have to go back through my notes and look for my discount note, there, 4,300 euro. And the bad debt recovered, again, that will be coming from the notes. So the bad debt recovered. Again, if I just scan down through these, I should see the bad debt recovered. Here it is here, of 1,200 euro. So my total operating income comes to 5,500 and 298,500. My gross profit plus the operating income leaves me with 304,000. I now need to take away my expenses. So we have two different types of expenses. We have admin expenses and we have selling and distribution expenses. The first expense are my patents written off, which again I will get from my notes. So patents written off is coming from note 4 here of 14,000. Salaries and general expenses. I have to see that I don't think I made a change to salaries and general expenses, so they're just coming from the trial balance of 145,500. Rent, again, there was no change to rent during the year, so rent is 10,400. You just have to be careful with rent because rent could be income or expenditure. In this question, it's a debit balance, so it's expenditure. It goes in as 10,500, so 10,400. Insurance, insurance was including suspense, so we did make a change to that in our suspense note, which was note 3. Insurance including suspense is 19,400. Depreciation of office equipment, we also worked that out in the note where we sold the equipment. So depreciation of office equipment for the year we have worked out here to be 2,800. And the depreciation of the buildings we also worked out in the revaluation note. Depreciation of buildings for the year is 13,600. So that should be all our admin expenses done. So in total, they come to 205,700. Then we have to work out our selling and distribution expenses. So the first expense here was the loss on the sale of the van, which we worked out in note 2. So loss on sale of van was €1,000. The depreciation of vans for the year we also worked out in note 2. So if we look at depreciation of vans for the year, it was 23,400. And our third selling and distribution expense is commission. Again, commission is like rent and like discount. You have to be careful with commission because again, it can be income or expenditure depending on whether it's a debit or credit balance. So commission here is a debit balance of 16,500, which means it's an expense and it's a selling and distribution expense. So in total, my selling and distribution expenses come to 40,900, which leaves me with total expenses of 246,600. So my operating, after I take my 304,000 less my 246,600, leaves me with an operating profit of 57,400. I now have to add my investment income, which I have worked out here in note 4. My investment income, the full amount for the year of 4,000. I'm going to add that on in my operating profit to leave me with 61,400, and then I need to take away my mortgage interest, which I have worked out in note 3, the suspense note. The mortgage interest for the year, the full 10,800, is taken away at the bottom of the P&L to leave me with a net profit for the year of 50,600. That is the profit and loss done. And finally, for the balance sheet. First thing we're going to have in the balance sheet are intangible fixed assets patents. So we need to go back to our notes again because we had a note on patents which included the investment income. So the patents after the 14,000 was written off, the intangible asset figure was 56,000. Buildings were revalued to 800,000 at the end of the year, so they have to go in as 800,000. Because we revalued them at the very end of the year, there's no depreciation, so the net book value will be 800,000. Office equipment, the cost of office equipment we worked out in the notes on office equipment. So if we go back to the note we had on office equipment, where we sold the equipment, the cost of office equipment was 14,000. The accumulated depreciation of office equipment we also worked out in that same note. So I can get the accumulated depreciation of office equipment from here, which is €8,300. So 14,000 minus €8,300 leaves me with 5,700 net book value. And the delivery vans, I worked out the cost of delivery vans in my note 2. It was 158,000. I also worked out the accumulated depreciation of delivery vans in note 2, which are 67,400. So 158 minus 67,400 gives me a net book value of 90,600. So I'm just going to total the cost that, and I'll total my accumulated depreciation. And total my net book value. So the net book value of tangible fixed assets are 896,300. And the last type of financial assets, fixed assets, we have our financial fixed assets, which are our investments. So from the trial balance, we can see that the investments are 200,000. So to get my total fixed assets, I'm going to add my intangible fixed assets, my tangible fixed assets, and my financial fixed assets, which comes to 1,152,300. Current assets. My first current asset is going to be closing stock. And again, there were changes to closing stock throughout the question, so I need to get my most up-to-date figure for closing stock, which is 87,800. Debtors. There was a change to debtors in the question, so again I need to get my most up-to-date debtors figure, which I can see from note 8 was 71,000. And I need to take away my bad debt provision. Now there was no increase or decrease to bad debt provision in the notes, so my bad debt provision is just going to come directly from the trial balance, which is €3,500. Which leaves me with €67,500. VAT is an asset in this question because even after the change it was still a debit balance. So if I go back to my note on VAT, I can see here that we had a VAT asset of €4,400. And investment income due, again, if I go to my note on investment income down here, I'm looking for the due part, which is the 4 months, which is €2,000. So in total, my current assets come to 161,700. My creditors amounts falling due within 1 year. The first thing here, I'm going to have our creditors, which again were changed a couple of times throughout the notes. So I need to take my most up-to-date creditors figure, which is €83,200. PAYE, PRSI and USC, that did not change at all throughout the question, so that's coming directly from the trial balance, €21,600. And my bank overdraft did change, so again I need to go to my notes, note 8, bank overdraft is €69,600. And mortgage interest due, I've done a note on mortgage interest, so I just need to take the due part of it. The mortgage interest due, which is the 9 months, is €8,100. So that leaves me with creditors amounts falling due within 1 year of 182,500, and that leaves me with a working capital of 161,700 less 182,500. It leaves me with a negative working capital of 20,800, and that I'm going to add to my total fixed assets above, which leaves me total net assets of 1,131,500. For the final part of the balance sheet, my finance by, the first thing that will go here are creditors amounts falling due after 1 year. So that will be my mortgage. So my mortgage is just coming directly from the trial balance, which is 180,000. The next heading is capital and reserves, and the first thing that will go in here is capital, which again did not change throughout the year. So I'm going to get that the trial balance of 701,900. My revaluation reserve has to be added in here. And my revaluation reserve I will get from note 7. Total revaluation reserve is 218,600. And my net profit is going to be my final figure for my P&L, which is 50,600. So I add these to give me 971,100, and then I have to take away my drawings, which I changed in the very last note, note 10. Drawings were €19,600. So 971,100 less the drawings of 19,600, leave me with 951,500, and I'm going to add that to my creditors amounts falling due after 1 year to leave me with capital employed of 1,131,500, and I can see now that my balance sheet balances. So I hope that was a help. Thank you for listening, and I'll try and do another question 1 soon.